what if thinking that could have always been avoided by simply not trading on non-farm payroll week on Thursday and Friday. It's simple. It's simple. But you want to do something that everybody else is saying that they should be doing, getting in on the days that moves around. Well, there's a lot of movement on FOMC. Are you able to get in there before the rate announcements come out? How about the CPI number? There's a lot of movement there too. It's funny that the ideas don't apply to them, but it's the same thing with non-farm payroll. It's not worth it. It's not for professionals. NFP, not for professionals. But you witnessed this week a level of precision, continuity, consistency, visibility, all during a time when the market is predominantly unfavorable on Thursdays and Fridays of non-farm payroll week. And that should be an encouragement to you. For a new student, it's probably hard to appreciate where you're at and what you're learning, because you don't have a reference point to say, this is the other alternative. And for someone that has gone through other styles of trading, maybe tried different approaches to trading, and now they're doing this, it's rewarding to me as a mentor reading their comments and saying, I've been doing this, I've been doing this, none of it's ever worked or made sense to me. This makes perfect sense. That's exactly what I'm aiming for. That's exactly what I'm aiming for. Because there are different ways to skin a cat and make money trading, yes. But those disciplines don't get to the root cause of why price is going, where it's going, when it's going to go there, and why it should. That's what I try to deliver as an educator. When I'm looking at price, I'm internalizing a whole lot of things that create a narrative. Why is it going to go up there? Why should that candle not be broken in the process of going up there? What should be reasonable in terms of retracements, but no further than this? See, that's logic. That's stuff you don't have that in their traditional analysis. Trust me, I would tell you if it was, it would save me a whole lot of time talking. So here you go, just do this and be done. But it's been 1 month, and we have been watching live price action. I've called out specific things that I haven't taught before, and you watch them deliver in price real time with a 1 minute chart. Precisely. I'm not, and as you can hear me when I'm talking about it live when it's happening, I'm not surprised. I'm not hopeful, scared. This is what I'm looking for. This is what an algorithm should be doing at this time right now, doing this. My focus is on expectation of what I know is being driven by code. I'm not worrying about wrong or right. I'm telling you at this moment, in this instance right now, what the chart has shown right here, this is what we expect to see. And man, is it satisfying to see people say, what? That just happened. Exactly. That's where my satisfaction comes from. I'm not looking at the charts and saying, wow, it still works. That doesn't happen. What I get my high off of is you all experiencing, because I remember exactly what it felt like. And I live vicariously through all of my students' new discoveries, seeing something that I've grown bored of seeing. In that moment of astonishment where the veil's pulled back and you finally see what this market really is. And you all watch it in your charts real time. I often, many times, think to myself, that's when I'm usually putting a little smiley face tweet out. Because I know you're looking at the chart probably with your corners of your mouth turned up too, in a smirk or a smile, because damn it, it happened again. There it is. It just happened again. It's not random, right? And that's exactly like I'm in the room with you. Like I'm watching that chart just like you are. And the same thing that you're experiencing and you're smiling thinking, man, this is not random. This is predictable things that I can see that he taught this. He pointed this very thing out and it's going right there. And then as soon as it does, I already have a well-written tweet with an image that's already pre-selected. All I'm doing is waiting for time and price to meet. I don't have the time to type all that stuff out right when it hits there. I'm doing it in advance because I know what's about to happen. It's what I've told you what's going to happen. And then as soon as it happens, the tweet hits. And I do that because I want you to read that. And some of you read it as bragging or arrogance. No, I'm showing you for the students that that is a monumental experience for you to remember. It makes it meaningful. Otherwise, it just looks like, so what? The market went to that level there. And you didn't notice the tweet that outlined why it should. I'm not interested in that person. That's not my audience. My audience is the folks that are looking at my tweets, actively engaging their own charts, going to that specific candle and saying, okay, he said this, now I'm watching it. How does it behave? And then what is he saying we're looking for? Buy side or sell side? That gives you what? Bias. So when it starts gravitating towards it, I'm typing up a tweet that says 388.7 booked and some kind of emoji to make everybody laugh or smile or whatever. And it's just my way of just putting a bullet point, a little pin in your memory about that was an experience that you watched unfold live. You knew it was happening beforehand. You watched it deliver, and now you have a memory of it. It's meaningful. It's impactful. And then you're going to be more inclined to do what? Journal it. And then you're going to put it in your own words. Whereas you watch me outline it, I can tell you in the tweets to say, okay, screenshot your chart right here, label it with whatever. How many of you are doing it? I would venture to say it's probably a good number of you that aren't doing it, and you're missing the opportunity to grow, to learn how to do this independently, because you're going to basically be mimicking what I do. That's the only copycat stuff that I think is worthwhile, not copy every model that I try to trade with. I mean, I could trade with all of them, but I have ones that I favor over others. This is my personal preference. It doesn't mean that the other ones are not as good. It just means I like these specific ones. And what is that? It's a second stage distribution in a sell model and a second stage accumulation or reaccumulation in a buy model. They're my unicorn setups. They're just, my eye is constantly seeking that. But if you put me in front of a chart, give me at least 5 minutes and I'll find a setup. It may require me to be on a second chart, but I'll find a setup. That's what I was doing this week. I was going in there, doing lots of trades, doing everything up and down. And you shouldn't feel like that's something that you need to do to be good. Being good is not what you're doing here. You're being consistent, eventually working towards profitability that's consistently profitable. That's your goal here. And your first rung objective is 5 handles. 5 handles in the ES. We've already narrowed your focus down to one market. Even if you're kicking and screaming saying, I don't want to do ES. I don't want to trade that. I want to trade euro dollar. Okay. What did euro dollar do today? Took a long time before I got started, didn't it? That's why I'm not there. Yes, forex pairs are moving around, but not like the ES is, not like the NASDAQ is. And it's going to stay moving around. I think this summer, we're going to have a very busy summer, whereas usually it's lethargic and just doldrums. I don't think we're going to have that this year. I think we're going to have a wild price action summer. And I'm here for it. And I'm hoping that, when we do our second baseline, which was what I gave you this week here, trying to recoup the drawdown. If you failed to get back to 150,000 on your paper trading account, Don't be discouraged by that. You now have a baseline. This is what you understood right now this week. This is what you were able to do in this week. Months from now, about halfway through between when we started in February and in November, I'll tell you, we're going to do another week of that. It's a second baseline. I'm going to tell you, drop your account down $3,000 and then spend the rest of the week trying to get it back. You're going to see, even if you fail the second time, it's still going to be a lot easier than it was this time. And the one I do in November, you're going to probably ace it. And then that's a wonderful skill set to have, because you're going to lose. You're going to have losing trades. Your account's going to experience drawdown. It happens to the best of us. You can't avoid that. Okay, you can't. If you're pressing the button and you're trading, it's going to come. How you deal with that as a losing trader in that one transaction or series of transactions, that determines how you're going to spend your career, whether it be in longevity or it's going to be short and abrupt. And for whatever reason, most traders are not interested in these topics, but this is the stuff that you need to know, because you can't survive in this industry without knowing it. You have to have your mindset correctly aligned with what it is you're doing and avoiding things that are going to invite your failure. And it comes with boring discussions and uncomfortable discussions. This would be better spent if you told us how to pick the right fair value gap. Tell me how to use the event horizon PD array. Some of you are talking like you know what it is already. You don't even know what it is. I appreciate and love your enthusiasm, but you need to dial it back. You have no idea what you're doing. Nobody knows what an event horizon PD array is. Nobody does. I haven't taught it, okay? Nobody knows what it is. Nobody in my private mentorship knows what it is. They're all waiting just like you are. But you're all out there posting charts and like you see it. Don't do that. Be genuine. If you don't know what it is, you had no business referring to it in your chart. It's disingenuous. And you don't think I know that you don't know? I haven't taught it yet. So anyway, I had a lot of fun this week. I had a lot of fun. I thought that we had a very productive week. And it looks like things are heating up. And the markets are really moving around good. So usually in the springtime, April and May, the market tends to create some type of a topping formation, and it starts to drift down into the summer months and into a low of the fall. This recent drop this week, once we went up into that daily chart, SIBI for ES, this was a little bit more energetic. I think the word's appropriate for that here. And we're in March. So we might be in store for, well, it could be a lot of things. But based on what I'm seeing in the charts right now, there's a lot of folks out there, a lot of the old dinosaurs, older than me, that use some really archaic retail stuff in their analysis and whatnot. Some of them are saying that we're just going to go sideways for a long, long time. And I don't see that. Like, I don't see that at all. I think that's an easy cop-out for just not knowing where it's going to go. So let's just say it's going to go sideways. And no matter what it does, as long as it's not crashing or going parabolic to the upside, they can keep drawing a range that's just wider and say, look, it's in consolidation. I'm going to tell you what I think, okay? And I'm going to tell you the reasons why. And then I'm going to close this and go have my 2 scoops of ice cream, Haagen-Dazs, and then cowboy up. So obviously there's a lot of things going on in the world with Taiwan, China, going on with Ukraine, and a lot of just saber rattling. There's, a major financial institution that just got shut down today. Happened on a Friday. Like I said, that's the motive, that they follow all the time. That's just the way they do things. I believe that we're going to see a lot of turmoil globally, not just in one country. I think it's going to happen everywhere. And that's going to accelerate things. We have central bank digital currencies coming. And my opinion, and I've said this to you last summer when I was doing Twitter Spaces, that you need to prepare, because in the next 18 months, and we're halfway in there, there's going to be a upheaval, some kind of jarring event, some kind of thing that's extremely uncomfortable for everyone. Me too. Just because I have money doesn't make me exempt. It's going to be unsettling for all of us. I don't know what that is, folks. Like, I don't know. If I knew, I swear to God, I'd tell you. I would tell you. I just know it's coming. And that abrupt catalyst that forces us to just almost beg for a central bank digital currency, because nobody really wants it. Everybody that understands really what it is, they don't want it. You won't have any privacy. You'll have control placed on you with how you spend your money. Your freedom is gone with your finances. And then once they have that, they have absolutely control, every bit of control over us as a society, which is the intent. I'm not going to do this or that. Oh, you aren't? Here you go. Push a button. You can't touch your money. Your direct deposits will go in, but you can't spend any more than this much. Capital controls. That's what's coming. You can't live a free life when you're under that kind of oppression. And nobody really wants it. So the way you get everybody wanting it is create a reason that this is the only solution that makes sense. So, and people will be begging for it, cheering for it. Yeah, give it to us. Bail us out. Give it. This is their way to fix it.